During April, I shared with you guys my Singapore REITs portfolio to show you what I have invested in, and it received very good engagement. So in this video, I'll review how much dividends have I gotten from January to June this year from my Singapore REITs portfolio, so that you know what to expect if you are investing in the same basket of REITs portfolio as me. And if you are ready for that, let's go! Hey guys, welcome back to Honey Money SG. My name is Christopher, and in this channel we are all about building financial knowledge, teach money saving hacks, and also help you lead a fulfilling quality of life. First of all, disclaimer here that this is not financial advice and I'm not a professional investment or financial analyst. So just treat it as education or entertainment purpose and have a good laugh. If you haven't checked out my earlier video reviewing my Singapore REITs portfolio, do check it out on this corner right here, where I'll show you what REITs have I invested in and why did I invest in them. And also, if you are interested to start investing but don't know which broker to use, I can refer you to Mumu Brokers or Tiger Brokers right down in the description link below, where you can get your free Apple stock. So don't wait anymore. I don't know when the offer is going to last. Go and get your free Apple stock right now. And with that, let's go on to my dividends for my first half of the year 2021 from January to June 2021. Let's start off with the first quarter being January, February and March. What dividends have I received? So for January, I actually did not receive any dividends because the month actually coincides with all the quarterly earnings release of the REIT companies. So they will usually publish their earnings release on the first month of each quarter. So for January, April, July or October, you probably won't receive any kind of dividends. Moving on to February, I actually received dividend from C2PU, which is Parkway Life REIT. On 26th of February, I received $107.10, which is coming from Parkway Life REIT. So each share of Parkway Life REIT will get you $0.0357, which is 3.57 cents per share. So I have 3,000 shares of Parkway Life REIT at that time. So you multiply the number of shares by the amount of dividend, I'll get 3,000 multiplied by 0.0357 to get 107.10. So total of Feb, I received $107.10 from Parkway Life REIT. The next month is March of 2021. On the 8th of March, I received dividend from AJBU Keppel DC REIT, which gave me $95.90. So each share will get 0.04795 and multiplied by the number of shares that I have, which is 2,000 of Keppel DC REIT, that will get me 95.90. Yes, so actually some REITs they pay out quarterly, but some REITs they pay out every 6 months. So Keppel DC happened to be one of those that pay out every 6 months, same as Frasers Logistics and Commercial Trust. So we will only see them once every 6 months. On the 8th of March, I also received dividend from ME8U Mapletree Industrial Trust. So I got 0.0328 per share multiplied by 4,000 shares that I have at that point in time. That gave me $131.20. And if you saw my portfolio review earlier, I actually had 5,000 shares. So in February, I only had 4,000 shares because I bought in another 1,000 shares of Mapletree Industrial Trust at $2.75 on the February of 2022 to make it a total of 5,000 shares. So at that point in time, the 1,000 shares was past the ex-dividend date, which was not entitled to dividend. Anyway, on the 15th of March, I also received dividend from M44U Mapletree Logistics Trust. For Mapletree Logistics Trust, they gave 0.01442 per share in March, multiplied by 4,000 shares that I have, and that gave me a total of $57.68. So you can see March is actually quite a productive month because most of their REITs pay off in the month 3 of the quarter. And so my total dividends for March was $284.78. So if we are just summing up January, February and March total dividends for the first quarter of 2021, we'll come up to this number. So this is the amount of dividends that I get for the first 3 months. And then let's move on to the second quarter of 2021. Okay, first month of 2Q 2021, April has no dividend as usual because of the quarterly earnings release, and then most of the dividends will only come in May and June. So let's move on to what we have in May. Alright, so in May I have C2PU Parkway Life REIT again. This time the dividend maintained at the same rate at 0.0357 per share. So multiplied by the 3,000 shares that I have, I got back the same number, which is $107.10. And that's all the dividend I received in May. So let's move on to June. So for June, I have my heavy hitter ME8U Mapletree Industrial Trust again that gave me 0.033 per share multiplied by 5,000 shares that I have now. So I got a total of $165. And also some update on MIT preferential offer. So if you heard of the news, MIT recently offered preferential offering at $2.64. So I have 5,000 shares of Mapletree Industrial Trust, right? So I was entitled to 250 shares of preferential offer price of 2.64, and I applied for excess 750 to make it a full 1,000 shares. As of this point of video recording, I still don't have the results yet, but once I have the results, I'll put it over here to see how much have I gotten out of the 1,000 preferential offering applied shares. So if I have the result, I'll put it over here. Hope I get all Okay, and then the next dividend I got was on 10th of June, M44U Mapletree Logistics Trust again. This time I got 0.02161 per share multiplied by 4,000 shares that I have. That will be $86.44. Lastly will be BUOU Frasers Logistics and Commercial Trust that paid me dividend on the 18th of June. As of the recording time now, still not 18th of June yet but it's already on the list, so I will just list it here. So I'm supposed to get 0.038 multiplied by the 3,000 shares that I have, so I'll get $114 from Frasers Logistics and Commercial Trust. So for the total of June dividends, I will have gotten $365.44 if I add up all the dividends in June together. And let's add this number to my May number to find out the total number of 2Q21 dividends I have gotten over here. Okay, so total first half of the year 2021 dividends, here is what I have. On the first quarter, I have $390 plus of dividends, and 2Q I have $470 plus of dividends. So the total add up to around $860 plus, and that means if we divide this number over a span of 6 months, that means my monthly dividend is around $144. And then let's calculate my 6-month adjusted yield, especially for Mapletree Industrial Trust, because I added a few units after February, right? So if I pretend that I already had 5,000 shares in February that were eligible for dividend to make it an easy calculation, right? This will be my dividend yield for the 6 months, and then for the annual yield, I will just multiply this number by 2 to get my annualized yield of close to 4%. So it's very close to what I got in my previous portfolio review. Yep, so this is my total dividends received from my Singapore REIT portfolio for the first half of the year. So for those who hold these REITs, kind of like a news to update you on how much dividends you are receiving. Then you can calculate for yourself based on how many shares that you have. Anyway, I received an interesting question from one of my viewers in my earlier portfolio review video. So I just want to address this question of whether we should just buy the STI ETF or buy individual REITs. Since STI ETF already have most of the REITs that I mentioned down here, right? So why not just buy the STI ETF? So for those who are unfamiliar what STI ETF is, it is based on Singapore's top 30 largest companies by market cap, meaning the richest companies of Singapore as an organization. So what STI ETF does is they take the 30 strongest companies and put it in one basket, so that when you buy this STI ETF, which is ticker ES3, you'll get exposure to all the 30 companies. But they also have a reserve list of 5 companies, which is out of the top 30 companies. So anytime a company is kicked out of the STI, a company from the reserve list will go and take over its place. So it sounds very efficient, right? If you're not performing in the STI, you're out of the game. But the truth is, STI kind of works quite differently. So if you actually bothered to read the documentation of how STI is formed and determined, you will come to this section of the document, which I'm going to show it over here. Section 5.2.3a, a company will be inserted into the STI at a quarterly review if it rises to the 20th position or above when the eligible securities are ranked by full market capitalization before the application of any investability weightings. What does this even mean? It means that in order for a company to get kicked out of the STI, your reserve list need to overtake the number 20th company and not the 30th company. So that means you still can have 10 bad companies in the STI, because the reserve companies not only have to take over the last position of the STI ETF, but you also have to take over the 20th position. That is 10 companies to take over. And then these last 10 companies can just be like unperforming or underperforming for many years, who knows, right? Umbridge SPH, but they already kicked out so it's good. So in summary, you can have like 10 poor performing companies in the STI, which makes it very difficult for you to have such confidence in the STI ETF. So in my humble opinion, it's better that you invest individually in the REITs, or you just go and buy the REIT ETF instead of buying the STI ETF. If you want to do REIT investing, that is. Anyway, that's all for my sharing, and I hope you have found value from this video and learned something new. Do remember to use my referral link to sign up for your Moomoo or Tiger Brokers for your free Apple stock again. And make sure you like this video, smash the like button repeatedly, and share it to your friends and family who may find this useful as well. Do check out my next video if you're interested. My name is Christopher, this is Honey Money SG, steering young adults to financial independence.